following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's a rainy morning here in North Carolina. You can probably see the dark gray situation behind me. Getting a little chilly here finally. Gonna have to get the fire going pretty soon. So hope you guys are doing well. Hope you had a good weekend. Just want to remind everybody right from the start here, got a big webinar on Thursday. You can sign up for it on the TFNN website. I'm showing it right now on the home screen, free webinar with John Logan. This scanner is progressing now into finality this week. We are adding so many things right before the webinar that we've had kind of in development for a while. If you see these color-coded screens up at the upper left here, that's going to allow you to quickly do these sorts. We've got some very, very cool custom sorts with some background information on the stock that you're going to be able to hit on the home screen. It's going to basically find certain trading opportunities on the long and intermediate side, and then on the short-term side or the long-term side, you can come in here and do your own custom sorts. We're also putting in pre-market calculations here for the stocks. Finally, we're kind of going around e-signal data, which is populating a lot of this from Interactive. We've got an API data link into them to populate all this. If you guys wanted to ever find out how many instruments are in here, just go into, I'm going to go into the, let's see, I'm going to go into the home screen here, and I'm going to go into my indices section. If you want to look through all of these, there are quite a few instruments comprising all of these major global indices that we've got here ranked on 4-hour, daily, 1 hour. These are all breadth calculations relative to the internals of these indices. As you can see, 60-minute as it closed on Friday, a lot of these in today in Asia. In Europe, a lot of these are starting to turn here, but we're going to talk about that in a little bit as far as the indices goes. But if you go into the dashboard, you can come over here and actually add quite a few instruments at the same time, other than the S&P 500. If you're interested in looking at some other global indices and currencies and futures at the same time, do those sorts, find opportunities across more than just the S&P 500. So what's going to happen now with the pre-market information is the breadth statistics are going to react a little bit quicker pre-market now, and you can also do custom filters and sorts to find pre-market opportunities, which you couldn't before. So all this is going to be in the bank by the time we do this webinar. We're going to show you how to use it. We're going to be able to clarify how to get the tide of the marketplace, drill down into the instruments, find the inflection points, place the stops, put the targets in, the whole 9 yards, as they say. I don't know where whole 9 yards came from. If anybody can find out what that phrase means, I'd love to know. Anyway, so let's take a look at something. First of all, the euro, we talked about this. We talked about it getting momentum below 109. We talked about it coming down, reaching targets from that resistance. Most recent resistance area, 113.52. It met that, kind of did a little sympathy bounce here, and then we had the cave in, and we talked about this thing getting some momentum below 109, and boy, did it get some momentum. That unemployment report didn't hurt that concept, but now this is our weekly situation. And as we look at this, we always want to try to see, if we can do these closes below, go back and retest. So right now, and we had some retests. I'm going to pull up our daily here. We kind of had some retests on that 109 area the past 2 days. So here's Thursday. As we kind of migrated below, we reached a high of 108.97. And on Friday, we reached a high of 108.94. So I'm going to call that satisfied. But on the weekly, we could have a retracement back up into that 109 area to kind of satisfy our weekly situation. So be aware of that. It might not be time to sit there now and just kind of step on the gas pedal on the short side. You might have some retracements. Those are always good trades as far as close below inflection points and profiles and go back and retest those areas. So be aware that could happen. And that's where you are going to have some high probability trading opportunities. Let's look at the yen stimulus package. And again, the dollar going nuts on the north side didn't hurt this situation either. We talked about really getting bullish again above 122.55 on the yen. That has happened. We had a weekly close above there. It didn't hurt to look at the intermediate situation as we'd started getting, we always look at the long term or the profile that we're interested in or concerned about, and then using that time frame one step below, in this case the daily, to try to regulate that trade. Started showing the hints above this 121 area, and then that was hopefully we get back into 120. Let me state that number again. 122.55, and now we've had the weekly close above. So now you're looking at 122.55 as support on this particular trade. I don't know if we're going to retrace back, but this has been one near and dear to my heart. It's been one we've opted out on all short signals, even though we did have some breakdowns here. That was just a chance to say we're going to sit on the sidelines with our longs for a little bit. On the long term, we've been very bullish on this product since 101.33, I believe is the number. Yeah, right there, 101.33. And we had to wait a while. And, that's kind of, the name of the game sometimes on a long-term trade. You've got to wait till things line up. But right now, you've got another long-term situation, 122.55 you can lean on. Thanks, Larry. 9 yards of ammo and Bruin. Gotcha. Damn, I saw that on History Channel. I should have remembered that. And by the way, History Channel's turned into reality TV channel. I mean, History Channel 2. There's a kind of a throwback to the old History Channel. Good stuff. You can watch Hitler just mow through Europe most nights on that channel, which is interesting to watch. Not a big fan of that. Let's take a look at the Australian dollar. Wow. That's Larry. Larry's saying for you guys on the radio, his uncle was a forward gunner on B-29. Those Air Force guys took the most heat. That was a very, you talk about Marines and things like that. Those guys took a beating when it came to loss rates. Very, all for our country. And that's what really makes me sick is, a lot of these some folks out there, not naming a party, actually look at military service. They don't really understand. They just don't get it. I mean, people have sacrificed their lives. We had a Veterans Day parade I went to in Fayetteville, North Carolina on Saturday. And some people are turning up their nose at our military. It's just incredible. My father landed in Normandy. He had me when he was much older in life, and landed on Utah Beach and actually went into France and ended up spending 2 years in a hospital after having shrapnel pepper his body. I mean, some of these guys just don't understand the sacrifices that have been made and continue to be made from our military guys. Just makes you want to cry. I mean, it's just, wow. Yeah. That's for another show. Maybe not a TFNN show. All right, so here we go. So let's take a look at the S&Ps. We never talked about the Australian dollar. Sorry about that. I got off on a tangent there. The Australian dollar, we've talked about this might not have been one of the best shorts recently because of this divergence here. Still feel the same way on this. Here's the daily situation. You've come down into some support coupled with that situation on the long-term weekly, that divergence, not real interested in getting heavy on the short side with this no matter what now. I personally think you got a little bit of an opportunity here at 70, 40, 41 to try to trade a little bit of a bounce back up into, on a contra trade for you short-term guys, back up into 71.69, 71.70. All right, so let me restate that. I think on the Aussie dollar situation, you might have a little bit of a situation here where you can put some stops below 70.41 based on your appetite for risk and do a contra trade back up into 71.69, 71.70. But that's about all you're looking for on that trade right now. And if we get a pop and get a weekly close above 71.69, 71.70, then I'm going to feel a lot better about, trading that possibly back up into 74.39, 74.30, 74.39, 74.40. Okay, so we've hit the currencies. Let's see what else we got to cover here on the currency side. I had some things written down. Yeah, the Canadian dollar, again, I this is one of those trades that I like, just like the yen. We have reached some targets up here. We talked about this around 133.04. If you look at that with the profiles, and all these are really, just in the scanner, you can access these without having the charts. Here's our Forex screen. And here's let me just see if we can find this. Where's it at? Somebody help me. Why can I not find this? Here we go. Sorry, guys. There we go. There's that 133.04 up top on the weekly. Here's where we're at right now relative to all the profiles on the Canadian dollar. We backed off of that. That was kind of a target-rich situation that we had to wait and see. And now what do you do with the Canadian dollar? Guess what? You've got support, first support at 132.11. And I love this type of trade. We've kind of come up into that weekly unfair high. The U.S. dollar may kind of consolidate here before it moves higher. And you've got some support on the Canadian dollar at 132.11. Stops down below there. And you've got secondary support around 131.57. Why is that? That's the weekly POC there. Not interested in selling the Canadian dollar. All right, just to finish up with the currencies pre-market here. Currencies drive a lot of these global marketplaces. Here's the situation on the U.S. dollar. First line of resistance, 99.56. We talked about this not going in a straight line. Ultimately, we're looking at 128.29 up top as our initial goal on the U.S. dollar. But the good news is we don't have any new profiles attempting to appear here on our intermediate daily. We're going to talk about that a little bit more and then move on to some more things after the break. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the S&Ps really quick. We're going to talk about the notes briefly. The notes and bonds are trying to incorporate a kind of a possible quarter-point rate hike now. I mean, it's 5% unemployment rate, 268,000 jobs added. They might raise rates a quarter point. That's still not something that is a lock. But, in the past, they have done these quarter point without waiting for meetings. They've done them kind of all of a sudden. Be aware that can happen and that can shake the marketplace up. I mean, they can do these rate hikes or rate reductions at any point in time. And if you've been in the market a while, that that's possible. So, be aware of that. Make sure you have your stops in. Anything can happen. Don't be loaded up too bad without the stops or too heavy without stops. I mean, if you trade gold, you know exactly what I'm talking about. Taking a look at the S&Ps, we talked about Friday is still a buy support situation. I know if you look at the action on Friday, we had all this, seemingly great news, but then you've got to look at, does the market like the egregious quarter point rate hike to come off zero, basically? That's unbelievable. They're even concerned about something like that. But in my opinion, you still got a buy support situation on your hands. This is basically just, in my opinion, people adjusting positions, taking some off, sell the news type situation. And I think this is our 240. We talked about support around 2082, 2083 during the day. The other, as this rate hike situation was, as the report was coming out, you still got that 240, 282, 283 sitting there as kind of the 240 situation, and that's coupled with our daily here. We're not really coming off the top of this box much. Any daily closes above 2104 are going to be super bullish for this thing. But right now, again, you don't have any big time problems on the weekly. Remember, we're kind of staying with the trend as defined where the leverage is by our long term here, and we're still looking at this as we pull up this automated text situation based on looking at all these factors, breadth, internals, things like that. Pre-market, and again, by Thursday, by the time we have the webinar, we'll have pre-market factored in. We found a way around that. So hopefully that'll give some insightful information. Pre-market will change breadth around and allow you to do some pre-market filters, just like we talked about earlier. But right now, the leverage right now, and if you look at our daily, we're still breadth positive, even though we're having a little bit of a gyration here. We're supposed to buy support in those situations, and short-term support right now is 2082, 2083. And again, larger support on our dailies around 2063. So make sure you put your stops in, if you're trying to play the buy the dipper type game. I know you guys that are short don't want to hear about that. There's going to be some opportunities on the short side. I just don't see a lot of indications to start playing that game yet. All right, let's take a look at the NASDAQ just to give some NASDAQ numbers before we get into some individual stocks. Here we go. NASDAQ numbers. We talked about support around 46, 60, 61. On Friday, what do we hit a low of? 46.58, so rounded off 46.59. So we pretty much hit it to the tick. Let me just kind of focus on that. Again, these numbers are great numbers to leverage the trade around and orient the stops, more importantly. Right now, what do you do with the NASDAQ? Stops have to still be below 46, 60, 61. And that kind of coincides with our 240s down here, too. So that's kind of the buy point with stops below still on the NASDAQ. All right, just to cover all the usual suspects that we kind of look at to drive the marketplace, let's look at the 10-year. I'm kind of out of this marketplace right now in the 10-year. There's nothing to hang on to down here. It's been a good short trade below 27. If you got some momentum below this 27.11 area and you started playing that short side, that's great. I'm still kind of sitting on the sidelines on the 10-year. This is the 240 regulating the trade down. We do have a new box that's appeared in the last couple of hours here. Kind of staying away from the 10-year trade right now. We're going to take a look at gold, silver, crude oil, and then we're going to hit some stocks when we come back, guys. Hang around.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're going to continue to hit some of the usual suspects here. We're going to take a look at crude oil, gold, and silver. Here's crude oil. Dollar-denominated products have to reprice themselves. That was a little bit of a hitch there for crude oil. You got big support on the intermediate 43.11 down into 42.76. We hit that before. That's still going to be support, kind of collection area for longs. Crude oil, again, this is the long term, got the divergence there. I'm not a big fan of going short in a big way on this particular product anymore based on that alone. So that collection area down there, you can place stops below. Still think that's a decent place to start catching a bid on crude oil. Make sure you put your stops in. Let's take a look at gold and silver. Next stop down on the, after we had looked at that 1099 area. Somebody had called in about that. We talked about the major area was going to be 1086, 1087. We hit that and stopped on, we hit 1084, 1085. That's in the neighborhood on a very volatile product. Here's gold. Not exactly bouncing too well off of this inflection point. It's great to have these, but when you see the action like this and this thing could consolidate down here. Here's the daily. This is not exactly getting away from an inflection point that you want to see from a bounce and traded from the long side standpoint. This is This is very, very concerning for longs. If I'm long, I'm very, very concerned. Did I say that enough? Okay, let me check something else here. Here we go. All right, so we talked about silver just kind of on a relative strength or relative weakness basis being, not as attractive. Here's the situation on the 240s on silver, just really not even paying attention to anything from the long side here. And here's your support on silver. This is our weekly 1445. We talked about waiting patiently until that possibly happened. It's very, very concerning that it's not even doing any kind of sympathy situation here with, gold slowing down. This thing is not exactly looking good. Again, dollar denominated also. And the dollar, as we have looked at already, let me pull that back up. We haven't looked at this morning, or we have, but just to remind you guys, not a lot of signs that this thing's slowing down. Here's our 240s on the dollar. Even the short term, 98.88. We're finding support on this thing. I think we're going to get into that 126. That's not going to be good for gold, silver, or any other commodity for that matter. And these commodities have had some fundamental news outside of the dollar that is, as you know, you watch this show, you watch the news, it's a precarious situation. Let's take a look at the financials. We talked about the financials with the ability to gouge you more as the possibility of the yield curve widening situation may be happening. XLF, we talked about not even looking at this from the short side until we got below some inflection points down below, namely 24. So we looked at this close above, rattle around. This is definitely a long play at this stage. And the scanner, you can get all the inflection points for that. Let's take a look at Yahoo really quick. $34.35 pre-market on this. I got a couple of emails about this. And again, we had a close above. Let me just see where we're at here. Okay. In my opinion, this is still sell resistance type situation. I know we had a close above the previous week, got that reversal. This is another situation where you've got an inflection point to lean on the short side. Orient stops around. I'm still a big believer in that. Let's take a look at GE. These multinationals, dollar situation overseas could be a little bit painful. We got to keep that in mind. But here's the situation on GE. You still got support on the long side, 28.27 to buy retracements on this if it does come back. Markets, broad market, again, not looking at a lot of help for this to have any pullbacks. Here's the daily, still drifting above. What do you do with it now? So that's the question. What do you do with GE? If it's in your portfolio, I see zero reasons to get out of this trade. Do I see any reasons to add to it right now? Not yet. We need a pullback on this, or we need a new profile appearing. I had a couple of emails about that. Let's take a look at Weyerhaeuser. Another stock somewhat in the news on a buyout situation here. Repricing itself, 31 down to 29.46. Okay, so going to have a new profile on Weyerhaeuser. It's been a strong stock. It's kind of outperformed the market lately. And what you're looking at on Weyerhaeuser, in my opinion, is wait for this new inflection point to appear. I'm going to go in here and look at Weyerhaeuser really quick on our scanner. And you can see yellow peel back. And we're going to have a new profile, so you're going to be able to take advantage of that. And by the way, this is going to be pre-market indications by the time we do our webinar on Thursday, which is going to be really cool. Let's take a look at Apple really quick. Seems to be in everybody's portfolio. Finally got that new profile. You got support at 117.92, guys. That's going to be buying support on Apple now. Let's take a look at natural gas. Okay. So the good news is we're more than likely going to have a long-term profile appear today. Be aware of that. Be looking at the scanner for those new inflection points to pay attention to. You've got a little bit of divergence here in Navigator versus this. It may be time to start nibbling on the long side finally on natural gas. I've been a big fan of shorting this on any inflection points and selling breakdowns all the way down, but you may have some opportunities down here finally in the 232 area, but we're going to have to wait and see what those inflection points are. Here's the daily. You were able to kind of look at that divergence as it was happening on the long term, on the weekly, and kind of play around with this 223, 224 area. You got up top 2.44 as your target on this right now. And we got to look at January beans really quick before we move into any more stocks here. Here we go. This is an ugly situation. Close below, go back and retest. Not really wanting to rally past this. Can beans go lower? Yes, they can. Do you have an inflection point there to pay attention to? Yes, you do. Okay, so we're going to take a look at the scanner really quick. Actually, I want to mention the news service that begins with a Z, not to mention any names, which is just traditionally wrong. I want to pull this up. This is their long play. We're going to look at it relative to profiles. Exo Group. Thanks for letting us know now. Let's see if we got anything to pay. You know, these guys get people in so much trouble. I had to pull that up. Has it changed tone? Has it broken stride? Yeah. But, you know, having people okay, in the den, I will discuss that in a second. Having people pile into something after it's spiked up. What is this? Let's see where we come from. 13, 14, 16, 17, 3. After a 24% move up in a matter of a couple of weeks, they're putting this out there for people to get into right now. That's just utterly ridiculous. We're going to have to wait for a new profile to appear to look at this. It has broken stride. It has been doing well lately, but again, you know, these news services can get you into trouble and have the worst entries in the world. It's not a bad situation. Let's take a look at their bear of the day. And this is for the day, by the way. So, wow. That's after a 50% pullback, they're telling you to short it, which is, again, pretty stupid. It is a weak stock. It is a $9 stock. You got some magenta bars on Navigator down here. I'm not opposed to saying that this is a weak stock in a strong market, but again, you don't have anything to hang on to here on the long term. So again, I don't know if that's the best play on the board. Let's take a look at IBM. This is one we've been kind of beating the desk about using any opportunity to go short. This is especially after we broke down again below the 167.35. You know, it's still a short in my book. Here's the daily. Do you have anything to hang on to down here right now? No, I'd rather see a new profile appear at this stage to look at this. We had a profile appear above price action here, which was nice. IBM, no reason to take off long-term shorts right now, and you've got some serious things in your favor with that close previous week and last week below this 144 area. That's where you're going to have to orient stops now above, trailing stops, if you will, on IBM. Okay, so interest rate climate, some extra speculation. So one of the things I said earlier, which is no mystery to anybody watching this show, I know you guys already know this, but as the yield curve may have a hint of widening. These banks will continue to, I mean, they will have a chance to make more money on the spreads. I mean, if you open, I remember, like, you have a brokerage account back in the day when rates were 5% on the 10-year. I mean, the spreads on the, and again, I think Interactive Brokers has just destroyed the, well, you have a debit credit spread basically on, if you have a brokerage account. I know you guys look at this stuff. You've got, what they charge you to loan you money, and then what they give you as the extra cash in the account. It's the same principle with the banks. As soon as these rates start going up a little bit, they've got a little bit more area to play with as far as and a lot of people, they don't shop around for that situation, money market rates versus loaning money, things like that. So a lot of people don't change their bank account based on little fluctuations, or go from bank to bank based on fluctuations in the interest rates. So I'm not saying they have a license to steal, but that's how they make their money, is loaning money. And the interest rate environment, I mean, with the quarter point in general on the horizon, I don't see that as a big headwind. I mean, in the day they were, they'd raise rates without a meeting, a half of 50 basis points instead of 25 basis points back and forth during the Greenspan days, and those were kind of big numbers. But a quarter point rate hike is not going to be a big headwind for the U.S. stock market, in my opinion. If that's going to be the case, then you've got some people really, really that don't have any confidence whatsoever in some of the numbers that are coming out. Do I think that the main economy has full participation? I don't, but I'm not going to try to overthink what the indices are telling us and what the internals are telling us, and actually that relative to what's going on with the possibility of treasuries repricing themselves based on a quarter point rate hike. So, my opinion is on the S&Ps is you've got the breadth in your favor, going back to that, and you've got some support areas that you can buy on any pullback still, as long as that breadth stays positive on our weekly and daily. So anytime you guys want to call in and banter about that, I'd be more than happy to not just talk to myself and discuss this by myself. It'd be nice to hear some people call in about that and ask some questions, and for you guys to give your opinion, because a lot of the listeners out there would more than likely enjoy that opinion. All right, let's take a look at one more stock that I wanted to cover today, Tesla, before we go to break here. Had a pretty big move, obviously, this past week in Tesla. And a lot of guys, a lot of emails about this, what do you do with it now? So we're trading, let's see, pre-market, we're trading 231, closed on Friday, 232. You've got some targets up top. No reason to take this off on the long side yet, of 245, 246. That's where I'd looking to be taking off this trade if you've been long. We're going to talk about this a little bit more when we come back from break, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com.
or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're going to finish talking about Tesla here, just to get in summary here. 245, 246 targets up top. There's nothing to hang on to after the news here on Tesla. You got a little bit of a headwind around this unfair high, previous very wide profile at around 234. But again, this is kind of a consolidation situation to move higher. And I think you've got that 245, 246 to look forward to on Tesla. In the spirit of the question earlier about interest rates and some of the questions there, here's a couple of banks. Just for example, we had these, these good economic numbers, which, lends credence to a possible quarter-point rate hike, which obviously banks really like. We talked about this Friday. Bank of America's of the world, the Wells Fargo's of the world, my two favorite banks. See how these things react, see how this works. And really, I don't see any end in sight for these particular instruments on the banking side. Going to take a look at Whole Foods. A little bit of action here, but the action basically, and they're just trying to figure out how their business model is working now. with the competition stepping in. A little bit of volatility down here. You got a serious lid still on 31.23 to 31.36. Now remember, guys, things on their lows can go lower, and the numbers that are going to continue to come out on this company are probably going to be pretty damning. So this, in my opinion, is not on sale. That's our weekly. Still got big resistance also at 36.08 on this particular stock. We're going to kind of run through some of the things we covered earlier for guys who were joining us late. And then Larry's coming back, thank goodness. It's going to be back. That's going to be nice. TFNN. All the hosts on TFNN are awesome, but hearing Larry's voice next hour is going to be very cool. 2088 pre-market here on the S&Ps. Not a lot of reason to back out of long-term trades on the S&Ps. You got big-time support at 2063, and you got short-term support. Just to restate some numbers we talked about earlier, 2082, 2083, which we bounced off of on Friday. And if you look at these short-term numbers for day trading, they're pretty good. 2098 up top, resistance. I think we're going to go much higher. Any daily closes above 2104. I think we could continue to lurch forward. I'm basing all this with the leverage of the internals and the breadth that we look at constantly. The dollar's been kind of motoring up since we've been running this show today. As you can see, here's our 60-minute coming right off some of these support areas on the bottom. What's in store for the dollar? I think ultimately 126.28 and higher, 128.29, excuse me. Things don't go in a straight line. Make sure you put your stops in. There's really not a lot to hang on to. No new profiles attempting to appear on our daily, which is a good sign that the long term will continue. We're going to relook at gold really quick. This is a I can say the word shitty. This is a shitty situation for the long term guys. We did come down, and this is a bad situation, a crappy situation, excuse me. I was corrected. The 1086, 1087 on the bottom, that should have been a bounce area where we kind of got some legs off of there if we were going to, stay in that buy support area on gold. That's not the case. Look for this to head lower. And when it starts heading lower, a lot of people are going to be hitting the eject button on this particular product. So watch out. Guys, you've been great. Larry's next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.